You have probably heard this thousands of times that you should trade with trend and trend is your friend. But no one actually tells you how do you actually know what the trend is, because when you are sitting in front of the price chart, it's not that obvious. Price goes up, down, then sideways, and you are just sitting there confused. And that confusion is costing you money, because no matter how much you know about trading, if you don't know overall bias, your setup will fail. In this video, I'm breaking down exactly how to find real bias on any price chart. And before we start, I want to tell you something. If you are tired of watching videos that explains nothing, welcome to my channel. So hit the subscribe button, because I'm going to change the way you see price charts. So let's get into it. So let's say we found this chart to analyze, but first we need to define the overall direction where price is likely to go, because if price is on an uptrend, you should look for long setups, and if price is on a downtrend, vice versa, you should look for short setups. So in this price chart, my first opinion is price is strong and price is on an uptrend. We had a nice leg up and currently price is going sideways. Let's also zoom out, and you can see price is making higher highs and higher lows. Let me clean. But let's say you are not sure what price is really doing. You are not sure about the bias. I have one little trick that helps me clarify the overall confusion. So here on the bottom right corner, we have settings. And right here, we have invert scale. When I click on this, you see the same price upside down. So as you can see, green candles became down candles and red candles became up candles. So in this perspective, it's clear that this price is weak. But since we are looking at upside down price, it is actually strong. So this price is actually trending upside. So from this moment on, my expectation is upside. But I need to wait price to come down to logical price points. So my next move will be measuring this last leg up. I will zoom in. For this purpose, I will use Fibonacci tool. I will drag my Fibonacci from this low up until this high. You can clearly see the midpoint of our range is right here, 0.5 level. If my expectation for price to reach higher targets, midpoint of our range is very important. So price needs to stay above this 0.5 level. It can go down below this 0.5 level, but it shouldn't stay below that. Because if price spends more time below this 0.5 level, which is the middle of our main range, it might keep going down. But if we see price is trying to stay above this 0.5 level, our target will be previous high. So let me clean the chart. Right now, I will replay this chart a little more. Let me zoom in a little bit. As you can see, price created this range. This is the high of the range, and this is the low of the range. After making sideways, they push price down below this low of the range and the main 0.5 level. So this was clearly liquidity hunt. After price is cleaning all this sell side liquidity here, it got rejected from this low and started going higher. And also it went above this 0.5 level. Since my overall bias was bullish on this price chart and seeing this rejection from this low, I am suspecting manipulation on this price chart. And next thing we need to do is measuring the last leg down. So our high of the range is here and low of the range is right here. Let me change the color of this range to see better. So this blue range is our minor range and the yellow one is our major range. After measuring this last leg down, we need to measure the lower portion of this last leg down. Let's also change its color. So the first thing you need to focus is main bias. So as you remember, our main bias was bullish. That's why when I see this reversal from this bottom, the next thing I did was measuring this last leg down. So the logic here, if price is staying above this 0.5 level, it will aim this 0.5 level. If we can stay above this 0.5 level, it will aim our main high, which is here. So this price can still continue to go down from here. But as long as it stays above this 0.5 level, it will aim next one and the next one. So let's clean this chart. And let's replay a little more. So as you can see right here, after price surpassing this 0.5 level, it directly aim the next 0.5 level. When you see momentum incoming, you can enter long from this 0.5 level, targeting this 0.5 level. After getting rejected from this high, price came down until this 0.5 level. But as you remember, our main bias was bullish. So since our main bias is bullish, this price is likely to go up. As long as we stay above the 0.5 level of our main range, I would aim higher targets. So in this low, as you can see, price got rejected and still it is able to stay above this 0.5 level and this 0.5 level. So if you enter long from here, your stop loss should be below this low and our target is the main high. Let's replay and see. So as you can see here, price reached our target perfectly. So what we did here, first we measure our main range from this low up until this high. Afterwards, we waited price to have some reversal and show reaction around this 0.5 level. When we see the reaction from this low, then we measure our minor range from this high till this low. You can also clearly see when we measure our range, price is already respecting all the level that we measure. It is getting rejection from middle of our range, and also it is clearly visible. It is even respecting this 0.5 level, the lower portion of our minor range. Since we are above the main 0.5 level of our major range, we can comfortably target higher level, first this 0.5 level and high of our range. Let me clean the chart. I want to show you one more thing. So here we have exponential moving averages. Let me zoom in. Since our overall bias was bullish, every time price is below moving averages, you can comfortably aim higher targets. Because when price made reversal from this low and managed to stay above this 0.5 level, now price is strong again. And to continue its way up, it needs liquidity. But in strong prices, price will not aim the previous lows. It will aim below moving averages before it continues to go up. It goes below moving averages and it pushes up. And the second time it goes below moving averages and it reaches our target. So where we enter was below moving averages and above this 0.5 level. So I hope this video was useful. If you can clearly find your overall bias, I provided all the confirmation you need to find the real next move. When you are sure that our main bias is bullish, every time when price makes manipulation, you can comfortably aim next higher target. Before you apply this strategy on your trading, make sure you backtest it, because no one really explained how to find real bias. Because knowing all these trading methods using indicators won't help you define the real bias. If you cannot define if price is weak or strong, no trading strategy will work. So share your thoughts in the comment section, and if you enjoyed, don't forget to like and subscribe. So good luck with your trading. See you next time.